Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, it's been 2 years since the stress test B20 came into effect. What kind of an effect has it had, and did it chill the market, or was it just a case of the market was too expensive for people to get into?
Absolutely fantastic question. Fantastic question. So, yes, it's been 2 years. So this is what your listeners can take from today's show. You can't understand, meaning ourselves included, what the impact of a change is to a housing market generally for 2 years. Every single change that takes place in a housing market, you are not going to be able to measure the degree of change caused by the altering of the rules for about 2 years. Because the first year that takes place, the rule is now impacting the market. So you can't look at how the market is running this year against the previous year and say that's what the change is. The change is recorded the second time around. Depending on when the change takes place, in other words, when they're instituting B20 and how a market is functioning at the moment they bring in that change, it can take 18 months before that change is actually the rollover in the market starts to record what that change really did. And B20 is a prime example, as was the $37,000 boost that Vancouver got. Those are the two best examples amateur housing analysts can look at to understand how long it takes for change to be recorded. I mean, Jim, this is, I think, why economists and academics get housing markets wrong. The housing market, all of the levers that are pulled change every single month. The levers are never exactly the same. A small change in what the best 5-year bank rate that a home buyer can buy at changes every single month. It has never been the same throughout the 40 years of housing data that we've studied. A little tiny 0.1% change in the best lending rate that a bank will lend to the public impacts the housing market. You just don't know about that impact for 2 years, because that's the first opportunity in many cases where you can record a fair, honest, year-over-year comparison. Now, you can only look at that comparison if you understand how the compositional mix of home buyers has changed over that period of time. The beautiful thing about B20, and more importantly, the $37,000 boost, was because they came in at the beginning of a year, and because the changes that took place within 6 months of them being applied are black and white. The data is overwhelming. B20 lowered the amount of mortgage that home buyers could take on. That was not recorded nationally until this year. You didn't get an honest understanding of the 2016 B20 rule that was applied, 2017 B20 rule that was applied for first-time buyers. You only got to know about that impact this year, 2 years later. We are now coming now to the conclusion of 2018, and this will be our first opportunity to understand the first B20 rule. The current B20 rule, you're not going to know about till next year. Now, we're able to know what's going to happen because we know what happens when they raise interest rates by 0.1%. We know how a housing market is functioning. We know what the compositional mix is. We know what percentage of buyers are first-time buyers. And when you simply punch this all into an algorithm, it comes out with a number that's going to tell you what's going to happen with house prices. It's why we say house prices have nothing to do with houses. House prices are solely predicated on what the buyers are doing. The reason why we're able to make the commitments that we make to the people in the Wealthy Homeowner Program is because we have that 2-year lead time. They never, ever have to worry. The lead time is so massive because that's how long the real estate market takes to change. We're watching that in Australia. We measured Australia way back in 2015. What is it now? 2018? And now they've been talking the last few months, they've been talking about that housing market, their soft landing, which is going to turn into a full-blown correction. The Bank of Canada couldn't raise interest rates. This summer, every economist in Canada was like 98% said the Bank of Canada was going to be raising interest rates this many times before the end of the year. Yet on this show, we said, oh no, that's not going to happen. It's impossible. The bank is going to be constrained. As a matter of fact, I think on the show, we said the last increase, we said this is the last chance the bank is going to get to do it, so they better do it. What happened with the next opportunity? Whoops. No, reversal of fortune. We can't do it. Oh, but we're going to blame it on the Alberta oil collapse. No. It is housing. I want your listener to leave today's show, Jim, with one thought. Canadians are going to save about 1.6% of their income this year. The savings rate in Canada, Stats Canada is going to release that it's going to be around 1.6% of their income. That means 98.4% of the money Canadians make is spent. 98.4% of every dollar earned in Canada is spent. The number one expense are taxes. The second expense is home ownership. The reason why home ownership runs an economy is because 98.4% of all the money that will be earned this year in Canada will be spent. We don't look at the little tiny 1.6% that the economists are focused on. Our research focuses on the 98.4%. That's why we can time the market. That's why we can count first-time buyers. That's why we know what the impact of $37,000 boost in Vancouver is. That's why we know how the real estate board of Toronto, the Toronto Real Estate Board, is going to change the way that they collect data next year. That's why. Because 98.4% is way more important than 1.6.
It sounds like Ontario is the home of the moving goalpost.
Well, look at City of Toronto. City of Toronto today. They woke up today claiming all of a sudden that they're going to have $100 million less in municipal land transfer tax. We told the politicians 2 years ago that they shouldn't be counting on it because that money wasn't going to be there this fall. Guess what? The money's not there this fall. Oh, this is a big shocker. No, it's not. It's how housing markets work. They always work the exact same way.
Ross, the Canadian Real Estate Association says Canada is going into what it calls a soft landing, a correction to the real estate market. How soft will this landing be?
Well, there's no such thing as a soft landing, Jim. I think in all fairness, the only soft landing in world history is probably happened in Japan. And Japan now, I think they're about 27 years into it. They're still experiencing a soft landing. I know last week that Canada's biggest builder, Mattamy, did a Bloomberg article where both the CEO and the owner of Mattamy came out claiming that there was a soft landing, and bragging about it, actually, in coming outright and saying that they were partially to blame for the slowdown of the housing market, like taking credit for it. And they seemed quite pleased with themselves in this article, talking about having arrived at the soft landing. I know this yesterday or the day before, housing starts. Statistics Canada came out and said that housing starts beat what the economists had forecast. Again, bragging was going on. Obviously, the market has turned around, they say. Yeah, the housing starts beat what the aggregate of the economists' opinions were, their forecasts. I'll tell you, in all those instances, Jim, our data, our forecasts are totally different than what these people are saying. A soft landing has not happened in Canada. The housing market is unraveling exactly how it should be unraveling. It has been unraveling now for over 2 years. The fact of the matter, you just haven't read about it in the newspaper. If you've been tuning into this show, you've heard about it on and off. I can go in the newspaper, Jim, literally, every single day. I could spend 24 hours a day, 7 days a week, debunking headlines, myths, stories that appear in the news. Literally, it could be a full-time job just debunking this nonsense. Let me use the housing starts as an example. I need to stress, all the economists in Canada, the overwhelming majority of them, forecasted that housing starts were going to be lower than what actually were reported. And we laughed. We scoffed at that when we heard that that's what they were forecasting. Housing start, and then, just before I go further, those housing starts, the fact that more housing starts than they expected were reported, were being claimed that the real estate market was getting busier again. More proof that the soft landing had taken place. And we're sitting here, and I'm talking to the guys, and I'm having to explain it to them, because they're inundated by these headlines, and it's like it's a non-stop story. You're training people non-stop about the truth of a housing market. Housing starts are basically the most latent metric that you get in a housing market. There is only one housing market metric that's more latent than starts, and that is absorptions. That is the most latent of all housing market metrics. It is so latent, it is generally 3 to 5 years old, that metric. Starts are a metric that generally are 2 to 5 years old. So the reason why it beat the economists' forecasts was because the economists are looking at the market today thinking magically the starts are going to happen based on today's real estate market, when in fact, starts are measuring the market 2 to 5 years ago. You see, starts were required to be sold. Starts are a brand new build. Builders in Canada, in order to secure financing, have to pre-sell a high percentage of the properties that they're going to build. If they don't pre-sell them, they can't get the financing to go ahead and build them. That's why you see a condo tower being sold 5 years earlier before it starts to being started. The starts that were being measured this week weren't measuring the soft landing that the Canadian housing market was in now. It was measuring the housing market from where it was about 3.2 years ago. You have to look at single detached builds, which have a different sold to start ratio versus multi-family high rise. They have a different a sale to start ratio. So when you're talking about the overall housing market, obviously that's an average, and that ratio changes depending on the percentage of high rises and single detached that are being started in a month. But all that long story short, Jim, is the soft landing simply has not happened, and it won't happen. When we hear a builder, the largest builder in Canada, a builder that's so wealthy that the owner is able to donate enough money to the Oakville, Ontario hospital building fund that he gets his name on the hospital, saying that there's a soft landing, it just doesn't make any sense to us, especially when this particular individual, back in 1989, which he cites in this Bloomberg article, experienced his first housing correction. Now, of course, I know this because this company called our family up and asked us to list their properties. We said no, because we didn't want to have our name attached to a falling housing market, so having our names on properties in a correcting housing market. That builder almost went bankrupt. Now, years later, decades later, his name is on the side of a hospital because of the amount of money he was able to earn building houses. The soft landing is a myth. I do not look at the 27-year stagnation of prices in Japan as a soft landing. The Australians thought there was going to be a soft landing. Their marketing is being devastated right now. The way a housing market dominates an economy, the way that household consumption dominates an economy, you cannot avoid what's going to happen when a housing market begins to correct. The soft landing is a myth. It does not exist. There is no data in the world to support it. Don't believe it.
We'll have more with Ross Kay right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Ross Kay. Ross, both in Ontario and BC, real estate boards are making big changes in how they address the public. Do you know what the changes are, and how is that going to impact consumers?
Well, it's a big issue. It's a big issue, Jim. I know British Columbia, in particular, your home province there, the British Columbia Real Estate Association itself, just like the Ontario Real Estate Association, is feeling a lot of pressure. In British Columbia, they've redone their logos. They're redoing their website. They're changing their communication strategy. In Ontario, they became the heavy lobbyers of the government. The previous government and the current government, they are trying to get their own members elected to win elections. It is just overwhelming, Jim, when we look at the last 2 years, what's happened to real estate boards and the fact that the public doesn't know what's going on. So on the provincial level, the real estate boards lost their mandatory membership. There was a vote that took place earlier this year that meant that members of the Real Estate Board of Greater Vancouver no longer have to be members of the British Columbia Real Estate Association. Members of the Toronto Real Estate Board no longer have to be members of the Ontario Real Estate Association. They can become direct members of the Canadian Real Estate Association. That has caused these provincial boards to fight now for their existence. They are now starting to promote their members in ways that they never did before. They're being vocal advocates, where in the past they were worked under in the dark. They really didn't have a need to do this because they had a mandatory membership. And we're already seeing that happen all over the country, where these provincial boards are now attacking governments, making crazy statements and demands on the governments in order to hope that they're going to get their votes. The local real estate boards, they're just continuing the pattern, Jim, that they followed for the last 30 years. They make huge changes every year. They make changes that are so huge that the public is totally deceived by the local real estate boards. I'll give your listeners in British Columbia, in Alberta, and Ontario three samples of this. You didn't hear the real estate boards, the Greater Vancouver Real Estate Board, explain to people that they started to count for sale by owners in their sales data in 2014. They didn't tell people, the public, the news, the press, the media, anyone, that they were starting to count for sale by owners, and that you could not use 2014 sales against in a comparison against 2013, 2012, 2011 sales, because now they're starting to count something different. In Calgary, in Alberta, we'll move into the 2014 period, where again, they started to count for sale by owners. Then in 2015, they changed the rules, provincial rules, and that for sale by owner companies had to join the Edmonton Real Estate Board to post sales on Realtor.ca. That caused a whole influx of sales to begin to be reported in Edmonton, when the previous years they had been reported as Calgary sales. This data still exists on the CMHC website, by the way, folks. Your listeners need to understand, CMHC has been made aware of this. Their data still exists. They've changed their wording, but that data still remains unchanged. So what happened in Edmonton, in Alberta, was Edmonton got an extra reprieve for about a year and a half. Then, of course, the fire took place up at Fort McMurray, which means people moved back down into Edmonton, which gave them a third year of relief. Where in Calgary, that didn't happen. So for 3 years in Edmonton, the housing market was misrepresented to the public. And in Calgary, it was misrepresented for a full 3 years, because now on the third year, those sales that previously had been reported in Calgary were now being reported in Edmonton. In Ontario, we've got already the Toronto Real Estate Board, for about the 40th time over the last 30 years, has made a major announcement that they're going to start reporting sales differently beginning in 2019 than they did in 2018. But they haven't told anybody what it is. They have already gone and signed agreements for what they're going to count and how they're going to count it, but they haven't come out and told the public. Now, the Toronto Real Estate Board, they also were heavily involved in the for sale by owner movement in 2014, because 2014's record sales that they reported, it was solely dependent on for sale by owners, which in previous years had not been counted. Again, the public was misled. House price gains. When you start adding for sale by owner properties to average selling prices and benchmark prices, initially you're going to see lower prices. Then, in the following 2 and 3 years, you're going to see a surge, a higher increase in price take place. Again, no one talked about that in 2017 in the Greater Toronto market when they were talking about 30% house price gains, let alone the compositional change to the housing prices, let alone to the quality of homes being purchased. They also didn't say, oh, we're also getting a surge now because the impact of the for sale by owners that began heavily in 2014 and increased through 2017 has now been removed. which allowed the housing prices to go even higher. So your listeners that are listening to the show is, yes, but Ross, we're looking on the MLS and we're seeing that housing prices really went up, what these people told us they did. And what we would say is, no, you saw house price illusion. Because the real estate agents, the real estate salespeople who work at those boards, they don't know that this is what the boards have done. If they did, they would have to legally, in each province in Canada, before they cited a single data point, they would have to disclose this to you. So these blogs, these one listing brokers who are putting out reports, if they knew what I was just told you on this show, they had a legal requirement to tell you when they wrote the reports for the previous 3 and 4 years. Of course, they didn't include these facts. There's no debating this, folks. There's no arguments here. There is no deception here. This is a black and white issue. You were not told about for sale by owners being added to the real estate data. That began in 2013 and became heavy in 2014, and the final consequence was your 2017 pricing. The changes that are taking place at the real estate boards right now in December, setting up for 2019, are designed solely to benefit the members of those real estate boards. They are not designed to help you, the public. There's nothing wrong with that, except for the fact that I think that should be disclosed. I think you should have to disclose to people when you change things. I don't think you should have to rely on a footnote that requires 30 years of working in a housing market to understand. I don't think you should be able to put a footnote on the bottom of your real estate reports that all of the realtors who are talking about the real estate stats in a month don't even understand themselves. I don't think that that's right. And what you've got coming in 2019 is probably going to be the second worst year in changes to the MLS reporting system sales that Canada has ever seen. The worst was 2014. 2019 is now lining up to be the second worst of all time.
We'll have more with Ross Kay right after the break.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, last week a report was issued saying first-time buyers had dropped to 8% of all sales. A listener asks, where have all the first-time buyers gone? Have they been B20'd to death?
Well, I'll tell you, Jim, it is impossible that your first-time buyers dropped to 8%. I think what happened with that report is someone tried to use land transfer tax data from the government to try to come up with a percentage of sales that were going to first-time buyers. This is going to increasingly happen for people who listen to this show, and then the realtors, the bloggers, the whoever, they go out and try to figure out how we calculate stuff. So the reason why it's a falsehood that there's 8% of sales were going to first-time buyers was because your housing market couldn't function if there was only 8% of the sales going to first-time buyers. This is the same nonsense that we had in Ontario. So I think the report you're mentioning was in British Columbia. For Vancouver, there's a similar report, just the opposite here in Ontario. In Ontario here, the provincial regulator, the Real Estate Council of Ontario, they told everybody that 68% of all the homes purchased in the last 5 years were purchased by first-time buyers. So here we have 60% being told to, the public is being told 68% are first-time buyers in Ontario, and in Vancouver they were told that it's 8. Both numbers are ludicrous, and both numbers are being calculated by people who don't know how a housing market works. Because if they knew how the housing market worked, they would understand that that's impossible. In the Ontario case, where the provincial regulator said 68% of all homes sold in the last 5 years went to first-time buyers, means 34% of those, the owners of the homes that they purchased, are now homeless. There are what they're actually saying, Jim, is, in Ontario, there are over, there are over 200,000 families in Ontario that are now homeless. Former homeowners who sold their home that didn't buy another home. Because the way that numbers work, I think it just makes common sense. If 68% of the sales went to first-time buyers, that means there were 68 out of 100 sellers that sold their homes. In other words, 68% were first-time buyers. They bought 68% of the houses, the sales that were accounted for. The owners of the homes that they purchased, either they bought another house or they're homeless. 68 plus 68 is what? 136. 136. So 36% of those people are homeless over 5 years. It's an asinine comment for a provincial regulator to come out with. In Vancouver, 8% of sales went to first-time buyers. Okay, so how many new homes were built in Vancouver? Are you telling me that there was only that little tiny of a number? Because for every new home that's built, there has to be a new first-time buyer entering the market. Now, what happened, I think, in the Vancouver instance is that when you're looking at government data, you have to be able to read it for what it's saying. In other words, if a parent is on title for a first-time buyer, that home sale is not recorded as a first-time sale. Even though the first-time buyer is the one who's buying it, the one who's going to make the mortgage payment, the same type of first-time buyer that's purchased a house for the last 50 years, the only difference is the parent goes on title to allow the kids to qualify for the mortgage. They back the mortgage. Those are all gone. If a buyer purchases a home as an investor, which is a brand new first-time sale, which should be counted as a first-time buyer because they have been for the last 100 years, and they need to be counted that way to understand what how a housing market is functioning, those sales aren't included because there's not the kickback that on the transfer taxes that shows up in the government data. Then we have foreign buyers. When a foreign buyer purchases their first Vancouver home, that is a first-time buyer. That doesn't show up in the government data. So you have all of these different variables, plus more and more and more, that skew the data, that unless you know how to read the data and understand how that housing market is functioning, you create these false narratives like only 8% of sales went to first-time buyers. Now, folks, if there was only 8% of sales went to first-time buyers, that means you have a sales chain in Vancouver that is 100 divided by 8. That's how long your sales chain is. Because that's the number of sales that have to take place for the most expensive home to be sold in the market. Though that doesn't make any common sense. If your prices were spread out that many times, you never would have seen the house price changes that you saw. It is impossible. It is a mathematical impossibility.
So, Ross, what are the real first-time buyer numbers?
That is we don't publish that one, Jim. Okay, and we never will. Okay, we have government bodies, we have academics, we have lots of people asking us how we know how to calculate the number of first-time buyers. What I'll tell you is this, Tim. Historically, over the last 30 years, this is probably an easier way to say it, Jim. We can probably disclose it to you this way. Your first-time buyers never, ever in the history of Canada have gotten over 50%. Mortgage Professionals of Canada's Will Dunning has produced report after report after report that claimed first-time buyers were buying 50% of the homes. That is false. I will also tell you that we have never recorded it below 18%. So somewhere between 18% and 50% the first-time buyers fall in a given year. You need to know that number. You need to know how to calculate it. You need to know how to understand it in a historical perspective to understand what's happening in a housing market, how much housing prices can and will change. The reason why we can forecast, the reason why that we say we get to time the market is we know how to do these simple calculations. And believe me, Jim, it doesn't take brain surgery to know how to do this. You just have to know how to get the data, how to read the data, and then how to apply it against the housing market to make sure that you're right. What I think your listeners would understand. The provincial regulator in Ontario telling Ontarians, all 4 million homeowners in Ontario, that 68% of sales in the last 5 years went to first-time buyers is insane. It is ludicrous. 68 plus 68 does not equal 100. In Vancouver, I think your listeners can understand, if only 8% of sales went to first-time buyers, then the next 8% were the first trade-ups. The next 8% were the third trade-ups. The next 8% were the fourth trade-ups. The next 8% were the fifth trade-ups. The more trade-ups that you have in that mix, the harder it is for housing prices to increase. So, the reason why we calculate first-time buyers is because it's important for us to know how many days the average Canadian homeowner in the market we're measuring owns their house before they sell it. We can't do days owned between trades, that calculation, unless we know how to measure first-time buyers. From days owned between trades, Jim, we can calculate how much a homeowner has paid down their mortgage. We can take how much they paid down their mortgage. We can look at where the interest rates are today. We can combine those two numbers to know how much that homeowner is able to spend on the next house they buy up the property ladder. These are, when we come on the show and we tell everybody that real estate is basic math, that's why we can explain it this way. These numbers, believe me, Jim, a homeowner does not just go out and make an arbitrary decision to buy a home. No, the homeowner is governed by the rules and regulations that are placed upon them. And we have to be measuring those things at all times, which includes first-time buyers.
Ross, lots of stuff for us to talk about next week.
Thanks a lot, Jim.
My guest has been Ross Kay. He's a home ownership consultant at thewealthyhomeowner.ca. If you have any questions for the show, you can send them to info@housestreet.com. Our popular YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.